Is there a worry that commodities are becoming weaponized? We are hearing a lot more about troops being built up by Russia on the border with Ukraine. We already know that across Europe we're paying for that price to some degree because of high prices for energy. And we also know that China is trying to control some prices of commodities. And this is having a detrimental effect on inflation in the Western economies. And so ultimately, of course, interest rates. Let's catch up now with more about this question as to whether commodities are becoming weaponized with John Meyer, a mining analyst and partner at SP Angel. John, good morning to you. What are your thoughts on this subject? And is there any evidence to suggest that this is becoming a problem?
Well, we are really concerned about the increasing weaponization of certain commodities. And today we saw news that Russia is going to ban the export of ammonium nitrate for a couple of months. In fact, they have said they're going to catch up on those exports, but what they've said is they want to keep ammonium nitrate for their domestic market. Now, while that's fine for Russia, ammonium nitrates are used mainly for fertilizer, but also for explosives in the mining industry. And I'm not suggesting that Russia is going to start sending truck bombs into the Ukraine, but it's going to cause inflationary issues in Europe. If farmers can't get the fertilizers they need for their fields, then crop yields will be lower and food price inflation will be higher. And we've already seen that Eurozone inflation at 5.1% in December, catching people by surprise. Much of that is driven by high oil and gas prices. And of course, remember that Gazprom has cut sales into Europe and prices have gone through the roof as a result. And it's proving quite difficult to bring those prices down. So Western inflation is going up, whilst Russian and Chinese inflation is being limited by their actions to hold on to certain commodities internally.
Now, of course, we know, don't we, from past experience, that China has run itself out right across the world. It's now got its tentacles in many mines around the world and controls many commodities. And of course, I guess that is all part of the same picture. That being said, you and I have spoken on this very platform before about China trying to control prices and trying to suppress prices. Now, that would have an opposite effect than trying to bring about inflation. If China wants lower prices, that's surely happening as a dynamic in the opposite direction.
Well, we saw this last year in China trying to limit prices, particularly for copper, where they told industry leaders to not pay up for copper and keep prices down. They're doing something similar now with iron ore, and it's quite interesting because all the speculation a lot of the speculation in the iron ore price is done by Chinese speculators. Yes, there's some global hedge funds that play iron ore through a Singaporean index, for example, but most of this is a domestic Chinese issue. And they recognize that in order to limit inflation within China, they need to limit underlying commodity prices. So they're having a real go. But as you suggest, the knock-on impact of lowering prices is to perhaps dissuade some production coming in, and that in itself is going to create a vicious circle of causing prices to go up again because there might not be enough supply. And we're particularly seeing this in the battery metals, the lithium, where prices are now about 10 times where they were 2 years ago. Cobalt, where prices are very much higher than they were a couple of years ago. And these are all for NMC battery chemistries, for example. I think we're likely to see this in graphite going forwards and in a number of other metals.
It's interesting, isn't it? Because I mean, these are metals, again, we've spoken about before. And of course, one has to also to accept the fact that demand has increased many times over the last few years because of this interest now in finding new ways to store energy coming through from renewables. I mean, we've spoken about the increased demand. So I mean, that's presumably only going to go in one direction as well. So I guess prices possibly, could I suggest, only going to go up from this point, or do you see some of these high prices, like that 10 times lithium price that we've seen, do you see that pulling back to more reasonable levels, or do we have to live with these high prices?
Well, under normal economic scenarios, we would say these prices have done much of what they're going to do. but we're not under any normal economic situation right now, where we have over 300 gigafactories being built in the world and simply not enough metal to fill them. So it's very hard to see prices going down from here. I mean, I'm hesitant to suggest that lithium and tin and cobalt prices carry on going up, but with so much demand, it's difficult to say that they're going to go down. So I think we are, yes, in a rising price environment. I mean, and particularly when we look at the rare earth metals, very few new mining opportunities around the world to finance, and very little new rare earth to come into the market over the next couple of years.
One wonders how all this is going to develop. I know you're not a military analyst, and I'm not going to push you into any forecasts in terms of some of the more severe aspects of these sort of retaliations that are going on in the markets at the moment. But it certainly seems that China doesn't seem to mind causing the West pain. Ultimately, I guess it'll probably end in some sort of trade sanctions on a broader measure. And we've been hearing recently about the British government looking at ways in which it can retaliate against what's happening against the Russian troop buildup on the borders of Ukraine. But for the immediate future, I guess it's just a question of watching and waiting, I suppose, to see what's going to happen. What do you think will be the next pinch point, if you like, or the next point to watch out for in terms of the commodity markets?
Well, these communist governments have no qualms about pulling certain levers and causing disruption in Western markets. I think energy is still going to be a key player, so they're going to try and keep energy costs down locally, and I think that means that global energy prices are still going up, and that's going to cause us more inflation than we were predicting, and I think more inflation than we should be seeing. And I think for Russia and China, that's not such a big problem. For the West, yes, inflation is a difficult thing to deal with, and at the same time, we're having a kind of economic conflict here in that Chinese industry is still growing at a rapid pace, and the Americans are trying to ramp up their own GDP and manufacturing growth as well. And the UK, of course, is trying to catch up with everybody as we go along. So we have to take more command over our commodities, and we're fortunate in the UK. I mean, that there's a lot of metal under the ground in Cornwall, for example, and there are metals around the UK that I think we need to start developing in order to create some price stability and have strategic reserves within our own borders. And sadly, the Europeans are they're so environmentally conscious, and the green lobby is so powerful within the European Union that it seems to be incredibly difficult for them to develop their own or redevelop their own mining industries. And with gas prices so very high, we're seeing smelters that have been using gas in Holland and Italy being shut down purely because of the economic impact of very high gas prices caused by Putin holding back gas supplies out of Russia.
Yeah. Okay. All right. Look, John, we'll have to leave it there, but thanks indeed for joining us. John Meyer from SP Angel, looking at the commodity markets and asking that question as to whether or not we're going to see an increasing weaponization of commodities and its effects here on us in the West. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.